Hey everybody, what's going on? This is Danelle. Hope this finds you doing well. Let's go ahead and jump right into it. We're going to talk about Bitcoin and have a little heat check because Bitcoin's having a little bit of a moment right now. It's trading above $95,000 currently. It's up about 1.76% over the last 7 days. Ethereum also up about the exact same amount, currently trading at above 1800, so it's steadily starting to climb back towards that $2,000 range. We'll see if and when it gets back there. And you can see everything else for the most part is pretty much flat over the past week. We did have some movement obviously with Bitcoin over the past week or so, and now we're seeing that some of the altcoins have been following right behind Bitcoin. So we'll see if Bitcoin is able to stay above that $90,000 range. We're sure that there'll be a little bit of a correction and there'll be some areas of resistance, but over time we could potentially go back to those all-time highs over the next several months, potentially before the end of 2025. Some people are still speculating that Bitcoin could still get up to the $200,000 to $250,000 range before the end of the year. Obviously, a lot of the macroeconomic environment that we've talked about over the last several videos will play a large role as to what Bitcoin and some of these other altcoins will do. So obviously keep it locked here at Networkchain and we'll keep you posted on everything that's going on in this emerging market. So we got some big news over the past week. First, as we mentioned in our last video, the Federal Reserve gave, or I should say withdrew, guidance regarding the volatility of Bitcoin and cryptocurrencies, and that basically gave the banks the green light to be able to offer crypto services. So we see here that one of the largest banks and asset managers, Morgan Stanley, plans to offer Bitcoin and crypto trading to their E-Trade clients. So E-Trade is a pretty large trading platform, particularly with retail investors, and it looks like they're developing plans to introduce crypto trading onto that particular platform. And it looks like it's going to be available sometime in 2026. Also, Charles Schwab, which is another major investment firm and banking services firm, also intimated that they will be offering spot Bitcoin trading. They already offer Bitcoin ETFs on their platform, so they've already been exposed to the crypto ecosystem. So you can see here the 25 largest US banks by assets, and a lot of these banks are starting to get some type of exposure or offer crypto services to their clients. And we see here that Morgan Stanley, as I just mentioned, is going to be offering crypto trading to some of its clients. State Street, they already have a partnership with Galaxy Digital, which is a crypto native company, and they have a couple ETFs that are adjacent to digital assets and cryptocurrencies. We see Charles Schwab also, as we mentioned, already offers Bitcoin ETFs on their platform, and they plan to offer Bitcoin spot trading next year. And so we're hearing that some of these other banks, potentially UBS being another, that will potentially be offering Bitcoin ETFs to their clients possibly before the end of the year. So we see that with the amount of money that could potentially be exposed and still has yet to be exposed to Bitcoin, that there's still an opportunity for even more demand to come into the asset, especially since they have now received that announcement from the Federal Reserve removing that guidance, basically giving them the green light to go ahead and move into cryptocurrencies if they so choose. This looks like this $21 trillion class of banks could potentially have some exposure or more exposure to cryptocurrencies. So that definitely is something we'll continue to keep an eye on. And obviously, as more demand comes into this finite asset, like we talk all the time, it's only going to be 21 million. As you can see, there are 21 trillion of assets with these top 25 banks in the United States. This is not including all the other major firms, investment firms, and banks in the world. There is obviously a lot of demand that could still be coming to Bitcoin. So we'll definitely be keeping an eye out on that. Here is also a list of some of the largest investment and asset managers around the world. We all know, and we've talked about them many times, BlackRock is the largest asset manager with over 10 trillion And this is a list, I believe, from around 2024. So BlackRock does have more assets under management currently, but they have the largest Bitcoin ETF in terms of the amount of volume and the amount of Bitcoin they have accumulated, over 600,000 now Bitcoin through this Bitcoin ETF. Fidelity also has a Bitcoin ETF. State Street, which actually has one of the largest ETFs in the world, which is SPY, which is a index which tracks the S&P 500, is one of the largest ETFs out on the market. And then you see some of these other groups. UBS, as we mentioned, potentially will be offering Bitcoin ETFs possibly before the end of this year. Alliance Group, their insurance arm, actually invested a ton of money into one of the convertible offerings offered by MicroStrategy, so they have Bitcoin exposure as well. Invesco is one of the co-sponsors of a Bitcoin ETF. Franklin Templeton also has a Bitcoin ETF. So you see that a lot of these major banks and investment firms are now jumping into the cryptocurrency space. And so that just continues to add to the demand. And when you see that these asset managers are managing trillions of dollars, that just goes to show how much more exposure is continuing to come into the Bitcoin space. So if we're going to go here to the Bitcoin charts and data, just to once again give some perspective with regards to Bitcoin versus traditional assets, and you can see there really is no competition. I mean, the heat check just continues to bring the heat when it comes to Bitcoin and its return on investments. You can see here after year 1 all the way to year 14, this needs to be updated actually, but you can see here that Bitcoin, and obviously it was worth less than $1, and was worth pennies when it first entered into the public markets. But you can see that return is absolutely ridiculous. So if you got into Bitcoin year 1, if you held that Bitcoin, you are doing extremely well. So you can also look here at the CAGR, which is the compound annual growth rate. And it also, there's basically no comparison when you look at it compared to gold. And many people consider Bitcoin digital gold and believe that at some point Bitcoin will eat away at gold's market cap. Gold's market cap is around, I believe it's around 21 trillion or so right now, and Bitcoin is trading just under 2 trillion or so. So we still have at least a 10x to go just to get to gold's market cap. And many people believe that at some point Bitcoin will continue to eat away at other major asset classes, including bonds and potentially real estate as well. So you can see here what's happening with Bitcoin price and its closing history by level. So you can see how many days it's been above 50,000, 80,000, 90,000, 95,000, and 100,000. So we're seeing that it's starting to add more days above 95,000 and 90,000, and of course 50 and 80,000 as well. So it's just going to show that Bitcoin continues to go up these rungs in price, and we're seeing a steady incline year over year. Hence, looking at this CAGR, compound annual growth interest rate, or compound annual growth rate, you can see that Bitcoin continues year over year to continue to compound on the return and the results that it's providing for the investors in Bitcoin. You can see here, if we look at the return on investment chart, we have it compared to the S&P 500, gold, as well as bonds. And bonds is basically a safe haven for many investors because it gives you a rate. Usually it goes off of the federal funds rate. And so you can see here that it pretty much stays low, and actually has not been doing great. There's all different types of treasuries. This particular treasury, the TLT, which is the long U.S. Treasuries ROI since 2020, actually has gone down almost 50% since May of 2020, which is pretty crazy. So bonds has not been the way to go. Back in the day, it was always talked about that the best, or one of the best investment portfolios was to have the 60-40, which was 60 in equities and then 40% in bonds. And now that's completely being flipped on its head, particularly with Bitcoin. So even if you just add 5% or 1% to your portfolio, it has made a major difference. So we're starting to see that more people are looking to Bitcoin in alternative assets, and that could boost their return over over an expanded period of time. So as that continues to play out, as you start to see the results of Bitcoin and you're starting to see the results of people who have invested in that asset, soon that will bear more interest into Bitcoin. So we're still very early. That's why we think it's very important to get this message out there for you to have the opportunity to learn more on your own and do your own due diligence when it comes to this asset class. But we truly believe, particularly right now, that it's one of the best asset classes with the potential for the highest return out of most of the other asset classes that can be invested in right now. So definitely something to consider. Of course, you can stay posted with us on X as well on Instagram. We thank you. We know this is a quick one, but we wanted to go over and just give you an idea of what's happening in the larger market when it comes to the banks as well as the investment firms. And it's just going to show that we're seeing a lot of money flowing into Bitcoin. You can see here with the Bitcoin ETF overview, as we mentioned, IBIT, which is the BlackRock ETF, has over 600,000 Bitcoin. Their market cap currently of assets under management for the Bitcoin ETF is over 58 billion. Fidelity has almost 20 trillion. Grayscale at 18 billion. ARK, you see Grayscale's mini trust. Bitwise has almost 4 billion. So you can see total AUM out of all of the Bitcoin ETFs is over $115 billion. So it's continuing to climb. It's one of the best ETF launches ever when you look at the Bitcoin ETFs cumulatively. And you're seeing that the inflows over the last month or so has increased. And so we're not quite back where we were at the highs in November of 2024. But you see here that we have taken it to some of the highs back when it first launched in January, and the high back in 2024 before November was in March. So you can see we're getting back to those levels of inflows that are coming into the Bitcoin ETF. So that's just showing the more interest that's coming into the space. So as usual, we thank you so much for watching, and we look forward to linking up with you soon on the network chain. In the meantime, take care. Bye-bye.